are jumping in by starting to unpack financial inclusion. So I will go to each of you and ask, what does financial inclusion mean to you?
I'll go ahead and start. So again, I'm Katie Frost from the Small Business Administration. I lead the Office of Capital Access, which oversees SBA's loan programs. SBA runs government guarantee programs through our lending for small businesses. We have about a $500 billion plus loan portfolio in terms of government guarantees. And the way that works is we partner with private sector lenders, and we guarantee somewhere in the 75 to 90%, depending on the product, loan that they then do to small businesses in order to support small businesses who wouldn't otherwise be able to access capital. And to me, that's where financial inclusion comes in. Financial inclusion means everyone not just has fair access to the financial products of the market, but those who are traditionally underserved, and we've got great data on this, we know who they are. The financial industry, I believe, has an obligation, and the government, to find them, to target them, to bring them in to the financial sector of the marketplace and support them. And SBA thinks that we play a big role in supporting that, in particular with small businesses. We've made some changes to our loan programs to help target and shape that environment even more. And I'm sure I'll get into that later, but want to make sure others have the chance to talk about financial inclusion.
I can take that next. Hi, everyone. I'm Shardé Marchewski, and I'm the head of supplier diversity at Wayfair. I can give you just a quick rundown of what that means and what my role is. So hopefully you all are familiar with Wayfair. We're an e-commerce platform. I like to hear that. We're an e-commerce platform that partners, tens of thousands of suppliers with millions of end customers. Wayfair really owns the e-commerce marketplace, and we sell home goods furnishings through there. So with that being said, like I said, we don't manufacture any items. We work with suppliers. My focus right now is getting more diverse-owned businesses on our platform, coaching them to make sure that they have the best product on site and that they're putting product on our platform that will drive conversion, and then bubbling these products up to our customers more. So really just increasing the overall awareness and visibility of these items. So when we start to think about financial inclusion and what does that mean from my industry in that sector overall, it's really making space for diverse-owned businesses and making sure that they have equal access to customers and visibility and shelf space, which is oftentimes can be something hard for a lot of smaller businesses.
Hi, everybody. Jennifer Tescher from the Financial Health Network. So glad to be here. I have a different but complementary perspective on the topic we're here to talk about today. And in a way, it's in the name of my organization. So FHN turns 20 next year, which is very exciting. Thank you. And I would say for the first 10 years of our life, we were really focused exclusively on access. And then a bunch of things happened, including the invention of the iPhone and the financial crisis and the Great Recession. And we woke up and realized, you know what, like access may be good, maybe not, but whether or not it's good or it's insufficient. It is a first step. It's critical. But what is the outcome we really want for people? And we believe that the outcome we want for people is financial health. That takes lots of terms. Some people call it financial well-being. Those things lead to economic security, economic mobility. There's an alphabet soup of terminology we could use. I'm not here, though, to argue about the language. I'm really here to say that I think what matters most is helping people live the lives they want to live. And when people talk about when you ask them to talk about their financial lives, they just talk about their lives because those two things are intertwined, whether it's an individual or a small business owner, one of your workers. So for me, when I approach this conversation, it's really thinking about, particularly in the ESG context, what role do companies need to play in promoting the financial health of their customers, their workers, and their communities?
And maybe the other companies they work with, right? Shardé with their suppliers.
And suppliers.
Exactly.
Excellent.
Absolutely. Just to add that in.
And I'm going to ask you to elaborate on that a little bit more, because I think many of the people in this room are concerned with the fact that organizations have to take a stance and have the opportunity to. And so we love to hear a little bit about how each of your organizations, very different as we just heard, have been on this journey and what have been some of the learnings.
Yeah, I'm happy to start off with that. Sorry. So we've launched supplier diversity earlier this year. Actually, I take that a step back. Actually, last year, we launched our external-facing campaign, Celebrate Black Makers, earlier this year. When we start to think about, I think your question is like the challenges or...
Yes, like the journey that you all have been on as you started to embrace financial inclusion or equity initiatives.
Yeah, so the journey was really a few things. One, taking a step back and thinking about our position in the market and what we can actually do. Wayfair is a major retailer. We have a very large market share when it comes down to home goods. And so my thought in launching Supplier Diversity was, how can we leverage our size in the market to really amplify and elevate diverse-owned businesses? With having that thought, the next thing was having conversations with diverse-owned businesses to really get an understanding of what can we do, what do you need. I think my assumptions were wrong from what people actually experience in regards to roadblocks and barriers. One big thing that a lot of small businesses have is just they don't have time. They don't have the bandwidth to manage a major relationship like a Wayfair or some of our other competitors. And it's because they're oftentimes one person run businesses, and that person is the CEO, they're the COO, they create the product, their customer service, you name it. And so with that, these are all things that I kept in mind as we created the Supplier Diversity Program. So with our journey to really think about how do we become more inclusive, it was really removing roadblocks and barriers that we've seen firsthand with suppliers and the feedback that we've gotten from them on ways to make our relationship smoother and more feasible for them overall. With that being said, we've seen a lot of success now with suppliers. They are now able to, really manage our relationship a lot easier. We have somebody internally that coaches them and that gives them direction on how to grow on the platform. And with anything else that comes up, we constantly take back data. We're constantly iterating on the plan to make sure that we are providing everything that we can to make sure that we are being inclusive and giving that opportunity for equity and growth on our site.
Shardé, I'm just going to ask you a follow-up. Are there any specific strategies that you think, and give you a chance to brag on yourself a little bit, that have been particularly effective that other companies can learn from?
Yes, increasing the awareness and visibility. So it's actually exciting. We released a journal and a writing with a professor at HBS that just was published a few days ago. So I can send the link out later and maybe we can share it with some folks. But what we found in general is that when you let folks know that you have products from either small businesses, diverse-owned businesses, people are curious about it. And so spreading the word, bringing the awareness, increasing the visibility, people want to see it. McKinsey also did a report not too long ago that talks about, consumers are really thinking about their social values as they make more purchases. And almost 50% of consumers are really thinking about retailers and how they should be supporting diverse-owned businesses, and they want to see us do that. So I think that the biggest strategy that I've seen so far is lean into this, make sure that you're giving your customers, consumers what they want, which is supporting diverse-owned businesses, small-owned businesses, but then also just telling the world that you have it, bringing the awareness there, increasing the visibility. That in turn will typically allow these businesses to have more reach with consumers, and assuming that conversion rate and all that other fun stuff stays the same, as they get more eyes, more traffic, more views to their products, and just exposure to their businesses overall, you typically see an increase in sales, which then goes back to our conversation around being more inclusive on the financial side, which helps to really grow these businesses and start to increase wealth.
And Katie, you have the role of really increasing programs that are out there to actually help provide some of the capital that's needed to even participate in a corporate program like Shardé is running. Could you tell us a little bit more about your newest programs?
Yeah, absolutely. And Shardé and I were talking a little bit at lunch, and we said, even with more access, even with more support and visibility, a lot of small businesses, pretty much everyone, as you're growing, you're going to hit some sort of capital ceiling. And so access to capital is tremendously important in really kind of moving those levers of power and allowing businesses to start and grow. And in particular, there's been a huge small business boom, right? Over 13 million small business starts over the past 2.5 years. Many of them are being led by Black and brown business owners, which is outstanding to see. And as these businesses grow, they need that capital. Some of the things we've done at SBA to try to set the environment so that these businesses have access to capital through our lending programs. Really, I'm going to highlight kind of two things, because of course, I feel like we've done a million things, but I'll focus on two big ones. One is we've made it easier, we've just changed the incentives, made it easier for our lenders to do smaller dollar loans. For us, we're drawing that line right now at $500,000 and less. And so when you're using an SBA small product, you now have an ability to do things like use your own financial modeling rather than SBA's rigid 9-point scale. That would allow creative lenders to do things like look at, for example, rental history, even if you've never owned your home, to make a consideration on your personal credit or your business credit. So we've looked at a lot of different levers to try to make those small loans easier to move through so that our lenders can do them at scale and we can get more of those small dollar loans out to these new business starts and these smaller businesses who are seeking to grow. And then the second thing I'd love to highlight is we are strengthening the network of our lender partners, in particular with community development banks, CDFIs, and other regional banks. We've had a pilot program for the last 12 years, very long pilot, called the Community Advantage Loan Program. And just this summer, we've shifted the Community Advantage 12-year pilot over to now a permanent program. What that means is folks don't have to, the pilot had to be renewed every 2 years. They had this limited timeline to plan. Now they have permanency. And our Community Advantage loans loan to Black and brown businesses at 3x the rate of other SBA loans. So we're really excited to welcome them permanently into the SBA lending family. We've actually expanded the program from about 100 lenders now up to 130 and growing. And so very excited for some of the changes we're making, in particular to target those smallest of the small businesses and a lot of these new business startups from the past 2 years.
Want me to ask a question? You were already jumping in.
I'm happy to address the question that you've already asked, unless you've got something in mind.
Absolutely, go ahead.
I know we're all racing against the clock. Yes. So we try to do two things. We try to bring understanding of the actual real financial lives and real financial needs of people, human beings in our world, to bust myths, to change mindsets, because we ultimately believe that what gets measured gets managed. But we just often don't really know. We don't actually have the data to understand the financial situation that our customers, our workers are in. And then we use that data and work with companies to help them take action, whether it's a new product, a new benefit, a new policy, to really address the financial health needs of their stakeholders. And so the first thing we had to do 10 years ago when we shifted from inclusion to financial health was define what financial health means and create a framework and measurement methodology around it. We believe that financial health, which comes about when you have a day-to-day system that helps you build resilience and thrive. And it's really we measure it around your ability to spend, save, borrow, and plan. These are things everyone has to be able to do. So we've now built a methodology. We have a financial health score. We've built a technology platform that enables companies to, with the click of a button, measure and benchmark the financial health of their stakeholders to others. And with that information, we then help companies take action that is relevant to their business. So as an example, we have an initiative called the Worker Financial Wellness Initiative. And we're in partnership with Just Capital, PayPal, and the Good Jobs Institute. And over the last 2 years, we've worked with a little over a dozen very large companies. As an example, Chipotle, Chobani, PayPal, Verizon, and excuse me, and we said if you join this initiative, you need to assess your workers, either around the quality of their job or their financial health, one of the frameworks that the partners provide, and then we'll help you to take action. And over the course of the 2 years, over 1 million employees have either gotten pay raises as a result or improved quality of benefits, improved access to benefits. And so we're just incredibly excited about this moment. I'm sort of shocked in a way that we're using the word ESG anymore. I thought we would all have some code name we were given and a secret handshake when we walked into this conference. But, while this is a sustainability event, the financial sustainability of your workers is such a critical part of what you should be focusing on, because at the end of the day, it creates greater productivity, greater retention, and you get employees for life.
And if I could even just broaden that, because I think the same idea of, the strength of the workforce supports the company. And then I think about it in terms of like the strength of the business community and how that's supportive of the national and state and local community economies. Thinking about small businesses, which are about 60-ish% of the jobs in the United States, and how critical it is to have platforms that are empowering them in partnership with other businesses, larger institutions, and the financial institution. I think that it's almost like you can build it from the individual up and then from the small business out.
Yeah, I think it's also important to note, though, that the employees of small businesses are even less financially healthy. They're more financially vulnerable than the employees of companies that employ 500 or more. And so we're actually doing some work now on a new initiative to help make better connections between benefits providers, benefits brokers, and small businesses. Because while cost is an issue, it's not the only issue. The thing about it is that small business owners, particularly Black and brown business owners, really appreciate the needs of their workers and want to do right by them, but often are hamstrung to do so. So I think there's a really critical piece there.
Shardé, I want you to come back in this conversation to speak a little bit about some of the challenges, even as you're creating the programs, just that challenge at the center of the capital ceiling that often people have that may be affecting the benefits and the offerings that these small business owners can give, but also affects their growth.
So I think Katie mentioned this a little bit earlier, but one of the biggest challenges that we have is really thinking about how to scale these businesses. Oftentimes, small businesses have been very successful on their own with their own direct-to-consumer websites. They may have some very loyal customers. Once they start partnering with a very big player like a Wayfair or some of our competitors, you then unlock this massive customer base and reach. And oftentimes with that exposure, you then have to think about, well, how do I keep up with the demand? And so when we start to think about capital, bringing in inventory, producing products, having money tied up in more inventory, right? If you go from selling 10 units a month to now you may be selling 50 units a month and you aren't properly financed, oftentimes I see small businesses and folks are using their personal credit cards. They're using cash out of their bank account. They have families. A lot of them are right on that cusp of maybe not being able to quit their jobs yet, but getting very close. And so tying up a lot of money in inventory is frankly it can be dangerous, right? It's a risk. And so one of the challenges is, how do you think about growing these companies and how do you do it in a responsible way? And so when I think about supplier diversity, what we do is we start off small, right? So right now I'm focused on Black-owned businesses. And a lot of folks always say, well, when are you going to expand? When are you going to think about other groups to reach out to? I will do that once we have a good feel of how this playbook actually works and we have a great program in place. What I would hate to do is to give way too much exposure way too quickly and folks aren't able to handle the increase in demand. And so what I'm constantly doing, and I do this every single month, I talk to my suppliers very regularly. They get emails from me at all times of the day, all the time. And I'm like, hey, what's going on here? Or have you checked out your inventory? But what I strongly believe needs to happen is you start off small, you get a sense of, well, what happens if we, increase the shelf space here? Or if we place a product in this event, whatever it may look like in your industry, but when I think about e-commerce and retail, that's how we think about it. What happens and what does the data say, and are we able to really keep up with any other exposure? And I think that's the best way to do it because you're starting off small, you're iterating, you're constantly thinking about how do you grow businesses in a responsible way, and it also makes it long-term. So as we start thinking about, sustainable, we don't do, like one-time collections. We don't do one-time capsules. The way that you really think about long-term growth that will happen over the years is scaling a business at a responsible rate. So that way they're able to start forecasting their product. They're able to start bringing in the right amount. They're able to sell through at a reasonable rate. And all that, again, goes back to being able to first have access to the capital and be able to sustain that from a financial standpoint.
We've yet to really talk about just the digital economy and how that also is changing the game in terms of whether it's creating a corporate initiative or starting a new government offering and programs, or even thinking about data and supporting organizations across the scale. What do you all think is the thing that folks in this room should be focused on as it relates to the digital economy?
We could spend the whole lunch talking about that question. I think I would say two things. One is the power of digital to reach people where they're at is just unprecedented. We all know that. It's true for all of us as well. As an example, we are an longtime investor in early stage fintech companies that are solving financial health challenges. One of them, a company named Propel, for about 10 years now has been working largely to support people who receive federal benefits, starting out with SNAP or food and nutrition benefits. And now that the pandemic is over and the government is rolling back a lot of the policies, one of those policies is the continuous enrollment in Medicaid, right? So you didn't have to keep going through the process of renewing during those COVID years. And because they're an all-digital solution, they were able to create a campaign. I mean, they have 5 million customers. 2 million of them are on Medicaid. And over the course of 6 months, they were able to reach and convince 650,000 of them to actually take action to do the renewal. That's a huge deal. It was far less expensive than it would have been otherwise, and it's going to really change those people's lives. So I think that's really important. And I think what I would just say on AI in one word is slow down. Slow down, and I wouldn't be putting anything in front of your customers just yet. Maybe as a support behind the scenes with a call center representative, other ways to make the people who work for you more efficient, great. But it may be a little too soon for prime time to have a customer-facing use case.
I think from my side, when I think about the digital economy, again, it goes back to just e-commerce and the reach. So I think that going digital is an amazing way to really help to be more inclusive with small businesses. Oftentimes, you see a lot of shop local, support your local businesses elsewhere. And I think that that's amazing because you should be able to support folks that are in your actual community. But I think if small businesses are able to get their products or their services out more broadly, more digitally to other people that they couldn't reach within their local communities, I think that really unlocks a lot of growth. The options are limitless. You can reach, just like you said, folks where they are in areas outside of your local community. And I think it's a great way to just really think about how to expand and how to really get more access to different people.
Yeah, so now I get to be the federal government person talking about digital tools, which everyone loves, because the federal government has a very long way to go to continue to digitize our products and make sure that we are meeting people in ways that they want to be met. But I would love to highlight some of the work we're doing at SBA to work with our partner lenders to allow them to use forward-thinking digital tools in terms of how they're doing things like evaluating credit, underwriting loans, screening for fraud, and otherwise kind of finding ways to reach and support small businesses. Again, that's kind of looking at trying to build in those flexible tools, starting modestly, not dissimilar to what you'd recommend your small businesses do with our smaller dollar loans. But we are looking to kind of bring that flexibility to the market and leverage some of the innovation that the digital economy has brought. In a modest way, we are the federal government. We're going to do this cautiously. But we are excited to take this first step, which we really just kicked off this past summer for our lending programs.
I think we are almost at time. I'm going to just allow you all to have a few minutes to just talk about any closing thoughts or big ideas that you think everyone in this room should be thinking about.
Sure, I'll start. I'll just say one thing we didn't have a chance yet to talk about today at this lunch is about employee ownership. And I know that that's something that Pete covered this morning in great depth, but there's also an opportunity, I think, for all businesses to explore what that could look like for your business. I'll share at SBA, 2 administrations ago, if you will, the SBA made some changes so that ESOPs could use our loan products. And over about a 5-year period, those changes were used 17 times, which is to say less than we were hoping. And so just this past summer, we've made our products more flexible for partial buyouts, which are going to support, among other things, more employee ownership options, we think, for using SBA loan products. So I would just kind of give voice to the concept of employee ownership and thinking about what that might look like for your company and companies that you work with as, I guess, the final item that I think we didn't get a chance to speak about yet up here.
One thing that I will kind of leave everyone with is, my spiel in general is how do you think about diversity from a commercial lens and really thinking about diversity beyond the human capital side is everyone has an opportunity to do this. I spoke at a retail conference last week and got a lot of questions on, well, how do I become more inclusive? How do we embed DEI throughout our entire company without, just limiting it to the human capital side? And my push has always been, think about just where you are and where you sit within your company and just ask yourself, how can we make this more inclusive and is it inclusive right now? And so that can be something, as simple as looking at any third-party vendors that you may currently partner with and say, okay, could we swap out one or could we give some share to another company that could be diverse owned? And so that's just one thing that I would leave everyone with is as we start to think more about ESG and we're leading into the S part here, I am here to talk about the DEI side. There's definitely ways that everyone can be a part of it, and it doesn't have to be a huge heavy lift. It could be something as simple as you start to rethink your next budget or your next conversation around the strategy for the company, just start to ask the question, where can we add in a level of diversity?
I love that, and I'm going to build off of what you just said. There's a chasm, a gap between ESG and DEI. There's things that don't really get covered by either, and every company manages it differently. But and one of the things that I wanted to leave folks with is sort of in that gap, because to go even further, a lot of DEI professionals are really focused on hiring, retention, training, comp, promotion. But that doesn't cover what employees need to be successful outside of those things. And it doesn't include benefits, and it doesn't include a range of other things. And often I think when people hear me talk about benefits, they think, oh, she means adding a laundry list of other benefits. I'm usually not talking about that. Often I'm talking about the intricacies of how those benefits are designed and offered that make them inequitable. It's not on purpose, it's not intentional. And I think in this environment in particular, there's going to be a desire, a fear of lawsuits, and we're going to pull back from wanting to even know what's the difference in enrollment rates in my existing 401k program based on race and ethnicity or based on gender or other forms of identity. But if we, again, what I said at the beginning, what gets measured gets managed. And if we don't know, we can't do anything about it. And yes, the benefits you offer have to be made available to all of your employees. But different benefits are going to be of more or less interest to different groups of your employees. And there are lots of ways to build policies and programs that will truly meet the needs of the different segments of workers you have and really meet them where they're at.
Thank you. If you all would join me in thanking the panelists. Beth in her introduction centered people, and it's right where we ended. And so I think that's only a fitting way when we're talking about financial inclusion and financial mobility and equity and sustainability. So thank you so much for giving us this time. I think you have 15 more minutes in the room to enjoy your lunch and to talk amongst yourselves, and the Bloomberg team will help make the transition to the next room. Thank you. So many great